Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Cowley. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Cowley, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Cowley.
Welcome to another edition of Premium Cashflow Podcast. Today, I have the pleasure of welcoming John Rubino from GID Investments. Thank you for coming on, John. I appreciate it.
My pleasure. My honor. I was looking forward to this all week.
Awesome. Thank you. So John is with GID Investments, which is a private real estate equity firm. Their firm invests in a lot of new construction and multifamily projects. Currently, their company has invested in a lot of multifamily and construction projects in Washington, D.C. Their multifamily holdings include projects in Georgia, North Carolina, South Carolina. And today we are here to dig into his story. John additionally is in charge of all the private equity investor relations, social media, and also the new business investor relations that he has to bring in the capital into his company. So their company has so far invested well over $21 million in various projects across. So it is quite a background John and his partner has, and we are here to just know more about their story and what different opportunities they're looking at. So with that, John, thank you for your time. If you can kindly take a few moments and give us some more background about yourself, I'd appreciate it.
It'd be my honor and pleasure. Thank you again for having me. And I've lived here in the Washington, D.C. area in Fairfax County since 2011. I did 20 years with the Navy as a pilot and enjoyed serving my country. And I had so many wonderful opportunities, engagements, meeting wonderful people. It kind of helped me also for business as I started the company. We got back to this area back in 2011, and I served on the Navy headquarters staff for about 5 or 6 years. Then I retired from the Navy in 2017. I started the business back in 2013 with my partner, David, who's down in Hilton Head. Mm-hmm. So we have an office in Hilton Head, and we have an office up here in Fairfax County. And the mindset of the business really was to bring together opportunities through partnered developers and sponsors that we knew, that we met, that we got the chance to build a fantastic relationship with, built on a foundation of respect, and also taking the time to understand what these companies they do and how we could add value to them. And where we add value to our sponsors and developers is we can bring a level of equity to the table for their projects that it helps them immensely. Mm-hmm. It takes less resources for them to have to come in when they can come to a business like me, and I can help them add value. I can add value and be a good fit for their business model. On the other side is I have about 135 investors that I've brought on board to the company who started out as friends and family, people I worked with in the Navy, David had as accounting clients, and became quickly also folks we met through referrals or public investors, people that were across the nation reaching out to us via our social media or our website who wanted to become accredited investors. So today we have about 135 investors, and we bring in both our money and their money on each of these projects to help these partnered sponsors and developers we work with, whether it's new construction or it's ground up development, it's multifamily hold, opportunity zones, student housing, storage. We look at everything that makes sense from an asset class perspective. And if it meets the criteria for us on the return structure, the way we can structure it, the terms, and the overall holistic approach we have, then we want to go into it. So we've been doing this now for over 7 years with the business. I've been passively and actively investing for over 15 years. And to be honest with you, it's been a blessing. It's really been a blessing, Sakar, to do this full time now, to meet wonderful people, build great relationships, and have the opportunity to do this for my full-time job. So I'm just so grateful.
Awesome, awesome. And first off, thank you, and I salute you for your service.
Thank you. Thank
It's a
you.
great service to the nation, so I appreciate you
Thank you
there
so
for sure.
much. Honor to
Uh,
serve.
Absolutely. Thank you for that. So, John, give us a little depth on, how you got started. Like, where did that real estate bug came from?
Yeah.
Because from where you were working in, all the different stuff, and now you are here doing real estate and private equity projects. How did that kind of come about, sort of your foray into real estate?
Sure. So I invested actively for a bit back in 2005 and 2006, where I
Uh-huh.
partnered with some local area builders. We bought some land together. They would build the property under a construction loan, and then we would do a transition to me as the primary owner at a point. And prior to that, I would probably market the property about 2 weeks before we went to closing, and I was able to find a buyer for the property. So we would just do a double closing, make some nice profits,
Sure.
and that was my start. I did about 3 of those, and then I was going overseas at the Navy for 3 years to Italy, Naples, Italy, and
Uh-huh.
I
Nice.
decided to invest. Yeah, it was a great tour. I decided to invest passively at that point with a few friends that decided to start their businesses, and they were doing some condo conversion, condo development in Washington D.C. primarily.
Mhm.
And one particular business did fantastic during the recession. They were growing, they were coming with cash. Cash is king during a
Sure.
down cycle. And I was investing with that individual where I was getting a fixed return over about a 7-year period. And
Mhm.
so when I decided I wanted to start this business around 2012, 2013, I knew I was retiring from the Navy. Did I want to go back to work as a government contractor? I really decided, no, I want to be an entrepreneur. It's in my
Sure.
blood. My dad was in construction. My mom was in a school teacher. She did private business. So it was in my blood to be an entrepreneur.
Sure.
And so I said, let me take this model I had for 7 years and bring it to this business. And that's
Nice.
really what I wanted to do, is I wanted to take the blessings God gave me over the 7-year period
Mhm.
and bring that to others, excuse me, including friends and family to start, but then actively engaging with accredited investors across the country at networking groups just to share with them what we were doing.
Mhm.
And from the investor standpoint, it's unique because when we talk to people that are interested in us from the investor side, we want them to come on board. We want them to be comfortable with our process, what we do. And then when they become investors by filling out our paperwork, they're in a position now to see our deals. And at
Mhm.
that point, they really don't have to invest a penny to work with us.
Right.
It's
Right.
not until we send a deal forward that they actually get to see.
Sure. 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 Makes sense.
Excuse me.
No problem. Now, John, I mean, it's interesting that you are in Washington, D.C. I am also in Maryland, right outskirts of, Washington, D.C. here. And we kind of see the market and see how much D.C. has changed. I mean, the amount of new construction and Class A development that has happened is phenomenal. And now here we are sitting in the middle of 2020. Amazon has already come in, and we know what has happened to the property prices and the commercial real estate in general.
Right.
Everything has gone up. It's incredible. Now, I want to switch gears here and understand that, for all your passive investors, how do you kind of sell or convince them the benefits of new construction? Because on one side, someone can say that, oh geez, new construction comes with a lot of sort of risks that the project may stall, or perhaps sometimes by the time all the land entitlements and permitting and all that stuff is being done and the project is ready for sort of, we say, the shovel ready projects, right?
Mm-hmm.
There is a lot of inherent risk that comes with it, right? So could you maybe give us insights into maybe perhaps how you sort of mitigate all those risks?
Sure. Well, first and foremost, we want to make sure that the developers we work with are very well experienced, have done this for numerous years, have a good track record, have a good portfolio, have gone up and down in the cycle, and have had success. So that's the most important thing to me, is the sponsor. And we take a lot of time up front to do due diligence on the sponsors we work with.
Mhm.
Ideally, it's a sponsor we've partnered with before and we've done a project with before, but we want to make sure that we have a fantastic relationship. We understand them and they understand us, and it gets a lot of the prerequisite requirements knocked out of the way.
Sure.
I want to talk to a developer and approve them for funding before I even look at a deal.
Sure.
And it tells me how dedicated they are to want to work with me. If I ask for information and I don't get it back, or they're covering things up, and I can tell there's red flags there that I don't even want to waste time looking at projects. So it's very important up front that we know that there's a good sponsor there. The next thing is the market. You just talked about Amazon. You talked about the DC market. We have a lot of absorption here in DC. We have a lot of absorption in Atlanta right now. These are good markets. We like the demographics, and they don't particularly trail with the rest of the country. Holistically, they kind of are leading the charge when it comes to growth, population, income, and a lot of jobs. So we want to go and be in the right markets, because if something like a COVID hits, or something with a down cycle or recession like we're now hits, we know that we're going to be able to absorb some of that, the challenge and that risk. The next has got to be good returns that meet our criteria. We are looking for high returns given the risk of these projects. Like you said, if we're going to come in and buy, the developer's going to buy a piece of land, then and we're involved in the equity for that, then yeah, the returns are going to be a lot higher than they would be for a shovel ready or a project that's in the stabilized phase of a project. So that's the next thing, is how do the returns look? Nowadays, I'm looking for pre-COVID plus returns given what we're seeing.
Sure.
Very important that we have that. And then there's other things I look at. What's the collateral? What's the sponsor bringing in? What are the fees? So that's where I'm pulling it apart. And then most importantly is, how do I exit this thing? If I can't sell the condos, or we can't sell the units that are being built, can we sustain a long-term hold to still make, similar type returns on paper that were very, very strong returns?
Sure.
We have to go into that model.
Right. Now it may be pertinent, John, that we maybe perhaps discuss a couple of prior new construction deals, right?
Sure.
Give us a sense of, what it was like, meaning from a investment to kind of the whole period and the disposition around it, and what sort of returns you were. And I'm curious because typically we interview a lot of, multifamily sponsors and things like that, but I haven't had a guest who you're kind of in a unique position where you're doing a lot of projects and bringing private equity into the new construction realm itself. And, I have had, other expert guests who were developers themselves, so which was, again, slightly different. So I'd be interested to know that how your firm is kind of going through the life cycle, and what were your prior experiences specifically in the new construction arena.
Yeah, so being a military man, I have a lot of checklists, right? That's the most important thing, is I go through my checklist. Every project has a very detailed journal that I keep, and notes, emails, everything is kept where I can go back and I can refer and make references to things. So that's very important, because when I was a staff officer, I used to write papers for admirals and generals and hire executives within DoD, Department of Defense. And I quickly learned that I have to be able to speak to these folks at the level that they, understand. And so when I talk to my investors, it's the same thing. I have to be able to explain things in a way that it makes sense. It's the data I collect that I'm bringing in from the developers and the sponsors, the life cycle of the project. I go out to the projects, I visit the sites, I talk to the GCs. So I'm a passive investor and I'm a passive business owner, but I call it passive firm on steroids, because I'm out there and I'm very engaged, and I have the direct ear of the presidents and the executives of these businesses. So I get updates quarterly, weekly, monthly, and I convey that into a very professional update that I send out to my investors so that they're aware. And then we always make ourselves available to answer questions, to take a trip out to a site with one of our investors who wants to fly in from Atlanta or California. And we bring them out there. We put on a hard hat and we put on a vest, and we make ourselves fully available. This is my full-time job. I used to do this part-time when I was in the Navy, and now I do it full-time. So it's even more of a commitment that I've had, and it's worked out really well.
Awesome.
So I keep involved in it. I'm the liaison. I represent the investors, and I also invest in, and I represent the developers and sponsors. And I'm also an investor. My money's in these deals.
Sure.
So I have to think like a sponsor. I have to think like a sponsor. I have to think like an investment firm. I have to think as an investor. So
Absolutely. And the key word there also is the fiduciary responsibility that you bear to your investors, which is, incredibly super important.
Yes.
Now, speaking on that there, John, is specifically about, let's say, the markets and how we evaluate these things, right? As you alluded, right, Washington, D.C. and Northern Virginia in general are extremely different in a zone by itself for a lot of reasons. I like to say that Northern Virginia is part of probably the Bay Area of the East Coast, as we know, with a lot of company, the diversity, the economy, just the amount of jobs and everything. It's an incredibly resilient and incredibly solid area, right? But from your shoes, right, how do you kind of evaluate markets and specifically, let's say, submarkets and different pockets of these neighborhoods for your investments? I'd love to hear your take on this.
Well, the first thing is I try to stay well versed on all the publications that are out there, both nationally and regionally into my local areas. I look at periodicals every day. It's the first thing I do in the morning with my cup of coffee. I'm reading BizNow articles from industry experts, whether it's Tom Bizzuto or it's people within the industry that I'm reading about. These are the leaders in our industry, and I'm learning from them every day. So that's one of the most important things. Is I'm reading, I'm looking at things, and I'm trying to come up with my understanding based off of what I see. DC, for instance, we'll just use that as an example. There's 4 quadrants in DC. Northwest and Southeast are very different. Price points are very different. Valuations are very different. So if I'm looking at a deal in Northwest or if I'm looking at a deal in Southeast, there's 2 different lenses I look at that. And I have a lot of information I pull up, demographics information. I have a lot of context. Being in the area for 9+ years now, I have a lot of professional trades folks I can go out to and ask for help with on independent analysis. So that's kind of the big things I do. And then I go back and look at previous projects I've done. I look at construction costs from a deal that may mirror a project I did 2 years ago to see how does this relate apples to apples from what we're doing here. And then David is he brings a wealth of knowledge. He brings a wealth of financial insight, and the parameters he adds to the company is amazing. So it makes my job easier because I can go out and do what I'm good at with oversight of what he does, and he does the same with me. So we're very, very, we have a really good partnership with our company, and that helps too. And we have a track record. We have proof of concept. I mean, if you can show investors, when I meet with a new investor who's interested in becoming an investor with us, and I can show them what we've done, how we've done it, how the structure works, how they made their money, it's very, very, it really hits home when you can do that.
There's proof right there, basically. Now, John, give us a sense of how you specifically structure this thing, meaning, what your relationship with the developer looks like. How are you kind of structuring the documents, the returns, the return periods and things like that?
Yeah, so it just depends on what that sponsor and what asset classes their focus.
Let's stay with new construction, for example.
New construction or residential renovation. We can raise money depending on the amount. We can do it as an equity loan. We'll set up loan documents. We'll set up, personal guarantees, collateral documents on deeds very easily through our real estate attorney if it's a smaller project. If it's a large scale, we're doing a project in Buzzard Point, 110 condos, 8 stories, 2,000 square feet in retail. That's a big project. We're raising millions of dollars for a project like that. We set up a joint venture limited partnership agreement with a sponsor. We set up a securities and exchange form D, typically a 506B. We can also do a 506C pending the risk of a deal. And then we would then syndicate, showcase that project to our investors who are already approved for investment. We don't go out to the general public and do that, only the folks that are on board. So about 135 people get to see each project. And up to that point, they never have to invest in a deal until they see one they like. Each project set up as a separate entity. So we're not a fund. We're not raising millions of dollars and then piecemealing it out. We're doing it deal by deal. We raise that money from the 135 of those that want to participate. We set up an LP partnership, separate entity under the 506, and we dovetail that. So each investor that comes into that entity is a limited partner my partner David and I are general partners. And then as the entity is dovetailed into the management piece of the project, we are a LP. We are a limited partner.
I see. How does the no, that perfectly answers. I appreciate it. What do the returns look like?
So on a new construction project or a development deal, the closer we are to the front end of a project where the land is purchased, it's post entitlement, it's got to go through what we call the horizontal, the development. We're usually making for the company around 28 to 32% a year on our money. And that's blended between a pref and percent of the profit. And of course it's deferred because usually that product is going to be for sale product. If we're shovel ready and we're going to come in for another round of equity during construction, now we're looking at mid 20s to high 20s, maybe even low 30s, depending on how much we can bring in. And so those are the types of returns we're going to get. So let's just make it easy. We're bringing in $1 million of acquisition equity, and we agree to a 30% annualized return on investment, not IRR. And that 30% is over the years. And let's say it's a 3-year project. At the end of that project, I'm looking to collect a check for $1 million on equity with $900,000 of profit. I
see. Awesome. And all of this compensation and returns are all deferred till exit. Is that?
Yes, that's correct on a new construction, because the end goal is to sell the product. And if it's a large product like Peninsula 88, 110 units, we know the bank's batting first in the batting order. And then you may get a preferred equity lender in there that's kind of batting second. And then we're batting third usually as the GP or as the LP or general equity. And for that, since we're batting third, we have the most risk, but at the same time, we have the smallest piece of the capital stack. We're going to get the highest returns.
I see. So there's increased risk and of course increased reward for that as well, basically.
Absolutely.
Makes sense. Yeah. I'm inclined to still maybe ask you questions, John, around new construction, for example.
Sure, absolutely.
What are some of the risks into such agreements, and how do you kind of mitigate those?
Yeah, so again, it's all about the due diligence. We want to make sure we know. I go through my checklist. I'm looking at commitment letters from the banks. We do a lot of the upfront work where we're getting references to make sure that these banks have worked before with these companies. If you're gonna give someone a $30 million construction loan as a bank, you better make sure you do your homework on them. And that gives us a lot of confidence that if a bank's willing to bring in that level of capital, that we feel confident that that's a good operation. But we do a lot of independent analysis as well. We do our own analysis outside of what the sponsor sends us in their pro formas and their offering memorandums. But yeah, at the end of the day, it's really how comfortable we are with that sponsor, that market, the returns, and then how the structure is going to look. And look, I can't control construction costs. I can't control appreciation. So it's got to be a strong number on paper, backed up by due diligence on both my side and the sponsor side, to be able to say, we feel good about this. And when we bring it to our investors, to make them feel good about it.
Sure. Thank you for that. Now, John, speaking from the same lens of construction, how do you kind of switch gears and look at multifamily markets? Like, for example, you said you have deals in certain pockets within North Carolina, South Carolina, Georgia, for example, right? How do you sort of switch those gears, and how do you kind of see the multifamily markets and the deals and stuff?
Yeah, so the multifamily we're attracted to most would obviously be value add, where obviously we're not making the 20s to 30s a year on the money. We're typically making returns where it's cash flowing about 8 to 9%. Cap rates are 5 to 7. We're typically seeing returns on disposition somewhere in the high teens. And IRRs maybe at 17, 18%. And we understand that when you have a stabilized asset, even though there is a value add, that the risk is not as intense or as aggressive as it would be on a new construction project. So on our website, we actually have, walking through cradle to grave of how a project would look for us. And on that last phase would be the disposition of a new construction, which is out sale, but on a stabilized property, we come in and we show how we're able to structure it. Very similar to the 506B, the joint partnership, the LP, the way it's all set up. but now as a multifamily cash flowing project. And we advertise that to our investors the same way we would with a new construction project.
Mm-hmm.
But again, I wouldn't want to invest with a multifamily sponsor that's in new construction and vice versa, where their focuses are in different areas of asset class.
Sure. Absolutely. Now, John, as a private equity firm, obviously we are all looking to grow and bring more investors and more equity to the projects and things like
Yes.
that. Share with us some of the steps you take or different avenues you pursue for sort of growing your company and bringing more investors and things like that.
It's about 75% of my effort every day now, and that's what I do. Is I'm always looking at how best to attract that segment. It's difficult. It's not easy because you're talking to passive accredited higher net worth individuals that are business owners or they're professionals, doctors, attorneys, government contractors that meet the criteria as an accredited investor. So it's a lot of work. I spend a lot of time on LinkedIn. I go to networking events for executives and professionals. I rely on those investors in my business that have done well and have openly asked or shared with me that they would like to share what we do with some of their colleagues. And that's a wonderful compliment.
Absolutely.
When I make somebody their returns and they turn around and are introducing us to others. So it's very organic. But as we scale the business, we are looking at talking to broker dealers, registered investment advisors, family offices that can open doors to larger pools of individuals so that we can bring on more investors.
Absolutely. And it goes without saying that you have a great service and a different partnership with your developers and multifamily sponsors that you have. So you have an extremely valuable service that you are providing, and you're absolutely giving great returns as well. And your record speaks for itself. Now, John, a couple of last questions. As you pursue in this business, give us some best advice you have received, whether it was from your past military career or perhaps you network with your colleagues and stuff that kind of keeps you in discipline every day.
That's a wonderful question. I have to be honest, that's not one I've ever gotten before, but I think it's very important to ask that question because you have to understand where you've come from and where you're at to know where you're going. And so I really appreciate that question. The military, being in the military for 20 years, going to military high school, military college. My dad was a Marine. I was around the military my whole life. But I feel like the personalities I got to meet in the military, the different types of character I got to meet in the military has prepared me immensely for business, where I know how to communicate because as an instructor pilot, I had to teach kids coming out of college how to fly an airplane for the first time. And I may not have the same kid in the chair today that I had yesterday. So I have to be able to assess that. And that's very important. Education is so important. You got to continually read and look at markets and talk to subject matter experts. This is a team sport. I don't want to pretend that I know anything, and I don't. And I'm always learning, and I have to be humble enough to know who to go out to and talk to when I need something, if I can't do it on my own end, or just to get that friendly advice. Having that circle of people that I can always go to. I had a meeting today with 4 of my closest colleagues, and we're talking about COVID, and we're talking about the markets and what we're all seeing, and just to be able to do that and bounce ideas off of people to give yourself reassurance that, okay, I'm going down the right path. I know what I'm talking about. I know that I feel comfortable. And then lastly, I would just say is always having mentors, advisors, and those you can go out to that you can either bring on to be part of something special. As I scale my business, I don't want to hire employees. There are positions that you may need employees for, but I want to have advisors. I want to have colleagues that can come on with me and add value to grow what we've have and make it something bigger and better at a comfortable pace.
Sure.
Thank you for that question. That's a great question.
Great advice right there. So thank you, John. I greatly appreciate it. Thank you for coming on. Give us some information about how folks can reach you and learn more about your company.
Absolutely. So we have a great website. It's www.jidinvestments.com. And we just redid our website. I'm really proud of the gentleman that helped us do it. And it's fantastic. It's very interactive. It's user friendly. We have a lot of documents there that we're a very transparent company. So that's probably the best way. We have a YouTube channel, JID Investments, that you can go to. Email me anytime. I don't know if you'll provide it in the notes, but
Sure.
yeah, please feel free to share my phone number, my email. And I want folks to consider me also as a resource to help them as they get started and or grow their business, because I think that you would agree, Sakar, that we're all in this together.
Absolutely.
We're here to help each other, and I don't consider myself to have competition. I have colleagues that I can help, and they've helped me, and that's what it's all about. So that would be great, and we'd love to talk to folks that have an interest in passive investment as well as those we can help.
Absolutely, absolutely. And couldn't agree more, John, that we are in such a niche space that, as big as sometimes we think, but it's such a small syndication world that few people that we don't realize that there are like 10 other people that already. So that is such a wonderful thing. And also the fact that sometimes I like to say this is a realm that not a lot, everybody knows stock market, but people
Right.
don't know the private investments and sort of the stellar returns that we can make, the ability to get to know, who are the developers or who are the sponsors and why it gives you the stability and surety of the returns. You don't get that in stock market, and it has proven for decades and decades now. So, and folks like us, have this knowledge intimately, and we know this easily, but a common, John Smith on the road probably doesn't know it, and that's the value we all provide. So thank you for your time. I greatly appreciate it. And you are a man and you're a company on the move. So I will be definitely looking forward to interacting with you again in future. So I appreciate it.
It was my pleasure. Thank you so much.
Thank you.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.